is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Oh, look who we have.
It's a beautiful day. Got our man, Jim from Minneapolis. We gonna take it by storm?
Taking it by storm, baby.
I love that. That's a great saying, man. Hey, what's happening, brother?
Good morning, gentlemen. How you guys doing today?
Good, man. Yourself?
Oh, man. It's been the most incredible couple of days since when I called in on Friday, Litecoin busted out of that consolidation on the 2-hour chart.
Okay.
And it just never looked back. It did a 100-point ABC up, and now it's very extended the way I look at it. But holy, I mean, it went up to $420 last night.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 7.5 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great week, folks. Be impeccable with your word. Replace fear with love. The human mind is like a fertile ground where seeds are continually being planted. When you're impeccable with your word, your mind is no longer a fertile ground for the words that come from fear. Your mind is only fertile for the words that come from love. Market-wise, let's take a look at it out here. We have the Dow Industrials down 145. NASDAQ is up 8. S&P's down 8.5. Gold contract up $17.90, trading at $16.04 an ounce. Silver up 43 cents, $18.16 an ounce. Light sweet crude, flat, $52.05 a barrel. Notes and bonds. You get the 10-year up 7 ticks, trading 130.107. We get the 30-year up 24, trading 163.05. That 10-year right now, folks, is yielding 1.553. 1.31 is the low that was established in 2016. Bottom line, I expect we're going to go right after that low. What you have out here in the note and bond market, once again, let's go over and take a look at the 10-year first and see how it's shaping up with the volume. And it's got the volume, too. Once again, okay, this thing is moving with volume once again. You get 1.7 million contracts out here. Big number, man. Big number. You know, I suspect we're going to go after the last swing high, which was on the 3rd of February. That is at the 131 area. If we do put this 10-year on a yield chart, what you're going to see, which is pretty amazing, is that let's see, 10-year. I need the yield, not the, let's see, Treasury note. Active yield, 10-year. Why isn't this popping up on me? Sorry, folks, just give me 1 second. I'll find this thing. 10-year yield. Okay, they changed this thing. I got to get this. 1 second here. Okay, I'll have to do that at the break. They changed the symbol on me. Bottom line is that right now you're at 1.553. 1.31 is the low from the 2016. My take is that we're going after that. King Dollar. Now, this is really intriguing with King Dollar. So if we bring King Dollar up, what you're going to see is that you are right at the trend line. And what is going on here, too, by the way, folks, is that you do have price spread out here today. And what happens when you break a trend line, you want to break it with conviction, and that whether it's going down or up. And what I mean by conviction is that if we're dealing with the aspect that we have volume with it, it would be wide price spread plus volume. That's with conviction. We don't have volume inside the currency markets because they trade at so many different places. What we do have out here, though, today is that you are coming into this trend line with conviction. You know, this is a decent move out here today, 429 ticks. Your trend line to break inside the higher range today is 99,427. We're over it. We're not you're at it over to a few ticks. What we do have out here, though, and I've talked about this before, when you come up to a trend line and you do have the price spread, more than likely we are going to see this thing bust into the higher range. That's what I'm expecting we're going to have out here more than likely tomorrow. Now, here's the divergence. We go over to the gold market, and gold is in a confirmed ABC structure on the way up. Had the volume. It had already taken out a B point. It took out the B point, and it had the volume as it took it out. The B point that we're talking about is January 6th, $1,595.70. We took that out on the 8th of January, but what we didn't do is we didn't hold price. You pull back, we pull back with light volume. We consolidated since the 6th of January. We're at the 18th of February. It takes off in spades. Bottom line, over the 1595.70, has 389,000 contracts, monster contract volume. Bottom line, 1705 is coming at us. And if we go take a look at the actual generic contract, which we can put back as far as we'd like, what you're going to see out here, I suspect we're going to go a little bit higher than that. The reason I'm saying that is your next swing point actually is 1795 up here. So we very well could get extended pretty easy. You know, you get a small one at 1,600. We're already at 1,600. Oh, this is going to be cool. Yeah, and see, if we go over to the GLD, what you're going to see is that the GLD bottom line never got back under its B point. So that was basically always a ABC structure on the way up. And now what the GLD is doing out here today is that you're going forward. You've done 8.9 million shares already. Bottom line, I expect they'll put a bunch of shares in at the close out here, and we'll see how many they put in the close. But the bottom line is that this thing is moving, and you also, and this is where it is helpful inside the metals market, is that you have the silver market moving with gold. Okay, we've had some high divergence out here the last 2 months, meaning silver was much weaker than gold. Silver's up 144 cents today, 120,000 contracts. That's monster contract volume. Silver is going right after the high that was generated out here on the 8th of January, which is that 1895 number. Some of the higher volume equities out here, well, let's actually go to Apple. So the big news out here this morning was that Apple wasn't going to make its numbers, and guess what? The market knew that all along. Bottom line, Apple goes down to 13.14, rejects lower price. Has some volume, though. There's some movement in Apple. You know, we did 31 million shares out here today, so they're moving some product out on Apple. Last swing low out here was 302. That has volume in it. So that's saying to me that Apple's going to be in this consolidation. If it pumps up a little bit tomorrow, that would be basically that'd be a test of its high. But right now, it looks to me like Apple does want to trade down to that 13. Apple, 1 second, 1302, I believe. 302, not 1302, 302. Stay right there, folks. Good on, man. Mr. Basil Chapman coming back. We are going to be talking markets. We're going to be talking riding that Chapman wave. Dow Industrial's down 128. NASDAQ is just shaking it right off. NASDAQ is up 15 points. S&P's down 650. Gold's up 1860. We're coming right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks. The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The gold report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the gold report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the gold report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow Industrials right now trading down 146. You have the Nasdaq up 10, S&P's off 8.5. Let's go over to our man, Mr. Basil Chapman, as we do each and every Tuesday at 20 past the hour. And don't forget, folks, Basil has an outstanding show here every trading day, 12 to 1 Eastern Standard Time. Also has a great newsletter, The Opening Call. Now, what Basil did last week, folks, he did a nice hour-and-a-half webinar for his subscribers. You can not only be a subscriber, but you can get that webinar by coming over to our website at TFNN. You're going to see right under featured content, the opening call. You hit subscribe. You can get it for newsletter for 1 month for $128, 6 months for $595, which is a savings of $173, a year for $995, which is a savings of $541 or 35%. Now, they all come with a 30-day money-back guarantee. You're going to get a great newsletter. You get the workshop that Basil just did last week, plus he has 5 more on that page. Basil Chapman, what's going on?
Hi, Tom. How are you doing there?
I'm doing great. Yourself?
Very good. Isn't it interesting that just last week we were talking about this very thing, that the reason why I want to do a webinar on the dark news cloud cover is that here we are with the coronavirus. This is the worst numbers they've had in quite a while. You've got Apple coming out, very disappointing. And the big thing about the webinar was to say it's how the market responds.
Right.
It's not what you're feeling, it's how the market responds.
I tell you, man, we've seen a lot of things in markets, Basil, the last 30 or 40 years, but this one, folks, is just, this market shakes off everything. It doesn't matter whether people are sick, whether they're dying, whether Apple can't have a supply line coming in, you know. Bottom line, it is what it is, right?
But everything's different. You've got Clorox at highs and you've got the market at highs. Defensive stocks never did that before. Not only that, you've got, I always talk about the dollar that for subscribers. We've been long since April of 2018.
Yeah.
Here it is at 99.44.
Oh, yeah.
It's just pennies away from the 99.67 high of October of last year. And gold is acting well. I mean, we've had strange things happening. So that's the reason why I wanted to say that in the market, what I was saying to you is that in the Chapman wave, let me just slide this over. In the Chapman wave, we're always looking for an identifiable buy signal. And if that gets upgraded to a buy mode, it should go to at least 4 higher peaks. It can go 5, 6, and 7 higher peaks, but it's that 4th highest peak at peak D that other things can happen. So what we've got, let me just move this away and I'll show you. What we've got is everything is, the MACD is good, the stochastic's at 89%, it's a little bit over the 9-period moving average, and it's at a B, and it should somehow, some way, I'm not sure it's going to do that, but theoretically in the Chapman wave methodology, we should get 4 higher peaks. There should be some kind of pop over 29,568 for that leg C, and in the S&P, the number to watch is 3385.09, and we are not that far away from it right now. We're at 3372.45, and just down 7 points. But earlier on, you were down over 20 in the E-mini. So I think there's still enough residual strength to say somehow, some way, we should make nominal new highs. Even Apple is only down 6 points now.
Yes.
So people are buying. That doesn't make it great. It just says that's how the market has responded, which is different to what emotionally one would have thought, having heard the news late yesterday, seen how the market created overnight. It just says that there are still buyers out there.
Sure.
That's really important.
Basil, where do you have the dollar?
So the dollar, let me just move there. So the dollar in the monthly chart had made a peak D. We spoke about those Ds, how important it is. So back in January of 2017, it made that 4th highest peak D at 103.82, plummeted down to 88.25 in February of 2018, turned around, and then it went. And this is one of the reasons why I always discuss the different time frames, because I had a buy signal in the daily chart. Then that was upgraded to a buy mode, and then it became a buy signal in the weekly chart.
Right.
That was upgraded to a buy mode, and then the monthly, look how the monthly, once it crossed the 9-period moving average, is the pink line before it changed to green, it held it beautifully, and it made nominal new highs, and it went to D. And that's where I said, I think we're going to have a consolidation phase. How long it lasts is very difficult to say, but it's really important that any pullback goes above that black line. This is the 14-period moving average, the black line in the monthly chart. We did that last month, and this month we're sharply above it. So the monthly chart has improved tremendously. It will go to an E if it goes above 99.67 in the dollar index. And this is that cup, in fact, let me just pull this back again. I always talk about cup and arch formations. So this is the arch formation. This is the cup formation.
Yeah.
And you can see that if you rally and you make that cup formation and take out that left side high, you can continue higher. And that's exactly what we've done, all these different ones. And then finally, there was a big cup formation at peak D in the weekly chart, pulls back to trough D, and now it's one single leg up. And it's made this cup formation, and the MACD is good, stochastics at 84% in the weekly. So that, and the big thing for me now is this is always very difficult, because this leg that went from 97.35, and that was, I think it was January the 31st. Yeah, January the 31st. I discussed this on my show, the Target Technicians Hour, this afternoon at noon. I was saying we've gone 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. This is the 12th session green candle. There was one red, but even that one had a higher high. So this all gets counted as one leg up.
Yes.
So we're either in leg F or a brand new A. I'm always very conservative, so I'm going to treat it as an F and say, well, we could have some kind of consolidation. But wow, the MACD is good. The stochastics at 98.37%. That is, I mean, that's about the highest you can get, and it's flat. It's holding there. I like that. So I said for a while, I've been discussing this as 3 separate things. Gold is one thing. Dollar is another. Bonds are another. And you have to think of them as separate. There was a period last year where I like to think of them together. Now they're on their own trajectories. It's very unusual to see gold and the dollar go in the same direction, for more than a few weeks. And this has been quite a while. Yeah.
Yeah, pretty amazing, there's no doubt. And folks, it's really easy to get Basil's newsletter. Come over to our website at TFNN. You're going to see it right under featured content. You're going to see the opening call by our man, Mr. Basil Chapman. You just hit subscribe. You get it for 1 month, 6 months, a year, all with a 30-day money-back guarantee. Bottom line, great newsletter, great archives that are inside that newsletter. And, you know, as Basil was just talking about, the last workshop that he did is very applicable, because what has happened, whether you're a technical and or fundamental trader, the bottom line is that you can make the case, technically I can make the case is that, hey, it seems like there should be a pullback. Fundamentally, you can make the case that, you know, the market fundamentally is saying, okay, the supply chain is slowing down, so you can make the case there. And that slowdown won't be for a couple of weeks. This is, you know, you have ports that are closed.
There's always a delay, though. Yeah.
There's a delay, and what ends up happening is that, you know, the bottom line, if they get that up and going, then they have to get them on containers or containers in Apple's case, because it's so big. They're coming over, and, you know, guess what? You know, so it's going to be a bit. But as we know, the market keeps shaking it off and says, hey, listen, man, I went to Sherwin-Williams this morning, and I'm going green.
Green bank, yes.
Basil, thanks so much, man. Have a great night, safe night. We look forward to the show tomorrow.
Thank you, Tom. You too.
Thank you. Stay right there, folks. Come right back.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. TFNN has developed a daily programming lineup for traders by traders. We start every trading day live at 8:30 a.m. with Tommy O'Brien hosting the morning market kickoff as he starts the day off by breaking down everything you need to know about what's going on for the trading day ahead. At 9 a.m., Larry Pesavento takes your calls and questions live on the air for the opening bell as he hosts Trade What You See. At 10 a.m., Tom and Tommy O'Brien host the Bull Bear Trading Hour. At 11 a.m., it's Kevin Hinks and Alex Coffey from TD Ameritrade Network with Fast Market. Basil Chapman at noon with the Tiger Technicians Hour. Steve Rhodes hosts the Trader's Edge at 1 p.m. Dave White with the Power Trading Hour at 2 p.m. And Tom O'Brien closes out the day for the final hour of trading live from 3 till 4. Don't miss a second of our daily programming lineup. Tune in to Tiger TV every trading day live at TFNN.com. Educating investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow off 151. Nasdaq is up 5. S&P's down 9.5. If we go into the NDX, we'll take a look at the strength versus the weakness inside the NDX out here today. Tesla's the mover. Tesla's up another 6.5% or $50. You got AMD up 3% or $172. T-Mobile's up 3% or $3, and you have Dollar Store up 3% or $246. Taken away from it. Now, what's so intriguing here is that you do have the composite in positive territory, and you have the chip stocks going south, and going south pretty dramatically. So you got Lamb Research down 4.5% or 15 bucks. You got Clack off 4% or 7 bucks. You got AMAT down 2.8% or $1.71, and you have NXPI down 2.6 or $3.55. If we go over to the SMHs and take a look at those SMHs, what you're going to see is that we came off those highs with volume, by the way. Okay, so 152.62 is the high on Friday. We did 3.7 million shares. We're at 5.5. What that says, bottom line, is that the bottom of this consolidation is down there at 136. So I expect we're going to go for that 136 area. LRCX. Let's go over to Lamb. Now, Lamb is leading the chips on the way down. You can also see with Lamb, you're down $15. We made a high on Friday with 1.1 million. You're down with 2.2. Bottom line, when you see something like that, folks, it's definitely a heads up. It's particularly a heads up when the SMHs had already come off their high once, had volume off their high, go back and test the highs, no volume on the test, come back off that high, and you have volume once again. That's when that consolidation sets up. And the lower end of that consolidation is down about 5 or 6 more points. We get open, we take a look at the FANGs out here. You got Amazon right now. That's up $24. That's not giving it up yet. Google, we take a look at Google out here. Google right now is up $3.56. That's not giving it up. Now, what Google is doing is Google's coming into this high with a big contraction of volume. The high out here is 15.29. We hit 15.31. We've done 861,000 versus 1.3 million. Facebook, we go take a look at Facebook out here. Facebook right now is up 344. This came down hard off its high. We'll see. Now this is going higher with volume contracting in a huge way. You know, we came down with 48 million. You're going up with 12.6 right now. That being said, guess what? You're holding price. If you're holding price, that is saying that that baby can still get up to those highs. Netflix up $7.83. And if we go take a look at Netflix, this thing it already busted its downtrend, and you're going for its highs. The highs in Netflix are 423.06, and I'll put this on a weekly, so if you happen to be watching Tiger TV, you can see this a little clearer. Weekly for 2 years. No, I got to put it so. No, I'm going to put it in monthly for 5 years, so you can actually, it should pull it up. Yeah, there we go. So if you put it on a monthly for 5 years, what you're going to see there is that when we connect these lines, we broke the downtrend that has been in place since this last high of June of 2018. We did it with conviction. You know, the month is not even over yet, and this month we've gone from 346 to 389. Right now you're laying at that 389. That's saying it is going to go make that run for the 432 high, and guess what? The bottom line is that if we get volume at that high, then you're talking a whole different ball game, because you are talking that you very well could have an ABC structure on the way up. The GDX inside the gold market. Gold's catching a bid. Equities are catching a bid. A lot of them are basically, a few of them are doing ABC structures on the way up. If we go take a look at the GDX, what you're going to see out here, it has it all. It has wide price spread out here today. You're going to have volume. We've done 37 million shares already. And what happens with the GDX, folks, is that they put huge volume into the close as they do the GLD. So we're going to be looking at both of those to see what kind of volume we get in. But the GDX looks to me is going to make that run to 29.87. And if we just go over to the GLD for a second and see volume-wise where we're at. Okay, so we're at 9.5 million. I expect what you're going to see into the close. They're going to put 4 or 5 million into the close on this. This is a nice setup, man. It's taken everything out. It has volume behind the move. Put this back. Look at that. I got to put it back even further. I like it. So I put it on a 15-year. And what you're going to see is that this has launched everything. We're at 150. So 154 is the next move. What I expect we're actually going to see out here is 174. And we are inching, no doubt, up to these all-time highs in gold. Right now, you're only, I think, $300 away from it. We hit 1604 today. your all-time high inside the gold market is 1920. And, you know, this is what's pretty cool. So check this out, folks. We've done this exercise before, but this is important to really understand. Because the consolidation was so long inside the gold market, what we had is that we started at a much higher level as gold start moving higher. And what I mean by that is this. We've had the gold report since 2001. When you go back and you start looking at this run, okay, the run started, in fact, 282.50 was, $282.50 was the first time that I got into gold, physical gold. And needless to say, I couldn't go shopping anywhere without understanding what is the price of an ounce of gold versus a shirt or anything else you were buying. So needless to say, I didn't buy too much when gold, the equation was gold, like how do you get 10 tons of dirt? So my equation would go like this. It takes 10 tons of dirt to get 1 ounce of gold, and that's a great gold mine. So every time that I go to spend $100, it was like, wait, kidding me, I can't spend $100 on this because the bottom line is that, you know, an ounce of gold is only $282. That being said, when this run started, the run started approximately 282, goes all the way up to 1920. We consolidate for a long period of time, 2011, we're to 2020 right now, right? Bottom line, this run started at 1,061. So you can see, and the retracement of this run, and this very well could be a very large ABC structure on the way up too, because what we had done is from the highs to the lows, the bottom line is that we did a 50% retracement from the lows that started at approximately, you know, 260, 252, up to the 1100 area, all the way back down into that 1046 area. That's a very shallow, well, it's not a shallow retracement, it's a 50% retracement. But when you don't do a 0.618 retracement of that whole move, that's saying you absolutely can have an ABC structure on the way up. We could blow that away. And, you know, bottom line, what I would do if you happen to be in that metal market or even the S&Ps in general, you want to keep your eye on the 10-year, you know, because I know the bottom line, we've been at low rates for a long period of time. It doesn't look to me like anything is going to change. I mean, if anything, this thing does want to go after its all-time low of 1.31. You break it, and we have flat rates, zero rates. That's what that comes down to. So yeah, you're talking about something pretty heavy if that's where we're going. Dow Industrials down 164. NASDAQ is up 2. S&P's up 10.5. We're coming right back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the tax opportunity zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Tom O'Brien.
Welcome back, folks. Let's get over to take a look at that oil market. So, oil's trying to get off its lows, folks. Off actually a bottom that we were made at about $49. So if we take a look at it, let's see. So this contract got down to $49.31. Your last swing point prior to that was $50.18. And, you know, you come off pretty good. I mean, we get off there. This consolidation has been out there for quite some time. Now, what we had out here today, so you come off the lows, and you have volume off the lows. Today what we did is that we got over the high of yesterday. We're going to be closing below it, and your volume contraction is pretty dramatic. So that's telling me that we're going to go back down into this $50 area. If we go over to and take a look at the equities, which have been leading the oil contract down, what you're going to see, ExxonMobil, bottom line, laying right at its lows. Exxon, you know, since the first of the year, has gone from $71 down to $59. If we pull this back, what you're going to see is that Exxon, bottom line, its swing low that's laying out here is at $55. We hit 55 in 08, actually 56, and then in then in 10, so yeah, 08 and then 2010. 2010 we hit 55.94. This is a major breakdown. You know, when we take a look at last month it took out the B point, took it out with volume. In fact, let me see this for a second. So that would mean, no, it's not an ABC down, but if you took the consolidation, it'd be pretty intense. The consolidation would be 64, let me just do it, 74, 84, oh my God. That's almost 25 points easy, and I'm being conservative, which would end up being, yeah, a 40. Let me pull this back a bit. I think we're at the beginning of this oil really getting destroyed here, actually. That's what it looks like. Yeah, well, 55 is the next leg on it. If it does break 55, you're at 47. That price projection right there just got me to 40, though. CVF, Chevron. We go take a look at Chevron. Chevron is a lot stronger than ExxonMobil. Pretty amazing, actually. Chevron's flat out here today. That also came off the lows. Different charts. These are two absolutely different charts. You know, Chevron bottom line does look much stronger than ExxonMobil. And, you know, we'll see where the rest of this shakes out. If we go take a look at the natural gas market, this is about as intense as you get. You know, we're kicking into the end of February, the beginning of March. And what we had out here in natural gas had hit a low last week of 175. We're at 197 out here today. Now, what you have with natural gas, folks, is this. This has been down in 4 months from 270 down to the 170 mark. You get a pop But bottom line, natural gas has to get back inside like 208 to mean anything. And right now you're only at 197. So you're talking about some, I wouldn't be chasing that market at all. The reason being is that you're coming into the spring. The bottom line is that, you look at the Northeast right now, they might be getting colder temperatures, meaning 35, 40 degrees. But guess what? It's the 18th of February, folks. You can get a couple more big storms across the country. But other than that, you're talking about 30 days from now. It's St. Patrick's Day, and guess what? The bottom line is that warmer weather will be coming at us right across the whole country, And natural gas, there is so much of it that I suspect the build more than likely is going to start much sooner because, if you listen to Tommy and I and we do the natural gas numbers, well, they come out on Thursday. The drawdowns this year have been dramatically much smaller, big time. Let's go to Al in Tampa. Hey, Al, what's going on?
Hey, in the gold market.
I'm sorry, I got you. So what are we looking at, Al?
GFI.
GFI. So let's take a look at it. This is Goldfields, folks. They're a gold producer. The low is 357. The high is 683. And this baby is got juice. Now, do you own this, Al? You're looking to buy it?
No, I got 1,000 shares.
That's a beautiful thing, man. What you have here.
Oh.
Let me pull this closer. I mean, it looks to me, you're going after this B point right now today. You're actually going after the top of the consolidation, which is actually more intense. So the top of the consolidation is 683. If you bust this, and you get a huge acceleration of volume, so you take 683 at the top. The bottom of the consolidation is 587. Ooh, that's pretty cool, man. That's $3. Holy cow. So that's 983. So let's go see what's at 983. So what happens, folks, I love to do the price projection first before you go see what's there because, so there it is there, 1050. So the next swing point is 1050. Let me do it this way too, 630. Oh, this is cool. You want to see something else too, folks? Okay, so I did the price projection on the consolidation that has been in place now for like 6 months. Then what it's also doing, though, is breaking a consolidation that started in May of 2013. And that consolidation, The first one I said, 9-something, 980, right? The second consolidation gets you up to the $10 area. So, man, that's where we're going. You get action here, man. This thing is going to be... Go ahead. I'm sorry, Al.
Oh, I was just going to say, remember I told you about Harmony and that I made some really good money on that, and I'm still in it. They pushed it down. They bounced me around, but it's coming back and that. I'm just wondering if this might make... I didn't see it on your watch list or anything else in the gold report.
A GFI this is, right? Yeah, it's a good one, man. I'd stay right there. This thing looks to me like it's going to go. You get that 660. That's already going, man. Anything over 660, we're at 678 right now, man. And yeah, this is going. And there's a huge amount of buy-in out here today, folks. What's going to be intriguing, and I'll get you that number when we do the update right at 4 o'clock, as to how much they're going to put in the GLD and the GDX. I expect you're going to see some big numbers out here because we have wide price spread. You get volume behind the move. You get divergence. The thing that's so amazing about the gold market right now, folks, is that you have the dollar ready to bust into its higher trading range. And guess what?
Yeah.
It doesn't matter. I mean, what's happening out here is that they're buying gold, adding gold equities hand over fist. So I just pull up the Gold Bugs Index. This is at 235. It's going for 245. So there's some real action.
Yeah, I just want to tell the people if they're not getting the gold report, they're missing out on a lot. I have like 45,000 into this, and I was up 3,000 today.
That's a beautiful thing, man.
The small amount of money that you have to spend, even try for 30 days in that. for the knowledge and the work that Tom's been doing for all these number of years in the Gold Report. I mean,
thanks, Al.
He's on the number. You know when to get out if you get too low.
I appreciate it, Al.
Saying that people need to go ahead and
that wasn't a paid ad, folks. I love that guy.
No, it's not. How long have we been together?
Have a great one, man.
Or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. And folks, when we take a look at Barrick Gold, what you're going to see out here, Barrick looks like it's going to do a ABC structure up today. It's driving into this B point, and it does have volume behind the move. The B point out here is $20.07. You needed 18 million shares, and guess what? We get 25 million. So the bottom, this is a monster ABC up, by the way, too. 20.07 is the B point on this. 11.70 is the A. So we're talking about basically $8.20. The C is 16, so that's a 24 handle, basically, that you're looking at. And we do own this in the Gold Report. In fact, we bought this morning inside the Gold Report. And if you do want to test the Gold Report, folks, real easy to do. Just come over to our website at TFNN. And the bottom line is that you'll see it right under featured content. Get it for a month, 6 months, a year, 30-day money-back guarantee. The dollar also, man, this thing is busting. And I suspect what you're going to see out here tomorrow is going to be a big day inside the dollar. It wants to get on the other side of this, of its higher trend. Bottom line, we've been below that since the first week of December. And if that's what we get, folks, okay, well, there's going to be some fireworks somewhere, because the bottom line is that, you know, when you get a break downtown, you get above it again, you normally get some big action. If we have a fail as it basically gets above that, then you will see some ramifications. If we go over to the euro, you're going to see it's all about the euro today. The euro is breaking down. This euro got under the range. The range is 108.79. We are at 107.95. And this is pretty intense, because this is saying that the euro can get all the way down to 103.52. So at 103.52, guess what, folks? That dollar is going to be tremendously higher. The real question is going to be, what is going to break? Right now, you got the gold contract and an ABC structure up. You get notes and bonds, higher price, dollar higher price. S&Ps, might as well be higher price. They're off 11. Have a great night, folks. Have a safe night. Come back and visit us right here tomorrow. 8:30 in the morning, Tommy kicks us off. Awesome show. Go get him, folks.